Hello traders and welcome to another video analysis. Today is Tuesday, the 14th of September 2021. Let's take a look at the Forex calendar to see what is going on today's markets. There were some data and some speeches from the Australian economy. As you can see here, we got the speech, we got the NAB business index, house price index, and so on. So we will definitely take a look at the Australian dollar and its reaction to this data. We got climate count change, climate count rate, and average earnings index. This data are scheduled for release at 8 o'clock, and as you can see, it's already been done just a few minutes ago. Minus 58,000 people versus minus 71,000 people, and as you can see, the previous reading of climate count change was minus 48,000. So this one is way better than expected. The climate count rate is dropping from 4.7 to 4.6 as expected, and the average earning index is slightly down because it was 8.8%, and on 3-month basis now it's 8.3%. So we will definitely take a look at the British pound. During the New York session, we have a consumer price index data from the US scheduled for release 2:30, and this is the key event of today. So we will take a look at the US dollar for sure. So let's take a look at the Australian dollar first. What is going on here? We had a very nice bounce from 7,105 pips. From that level, we broke above the 7,415 technical resistance. We tried to break above the long-term trend line, the golden one. As you can see, it's this one here. So let's maybe just take a look from that perspective. There you go. And the level of 7,483 has capped the rally here. So this will be our key technical resistance for now. We have the reversal here, then we tried to bounce, but 7,415 capped the rally again. We have a pin bar candle here, which has a large upper shadow, and today we are going lower. We are going lower towards 7,318. This is the technical support of the previous consolidation period, but it looks like we already have retrace around 38% as far as I'm concerned. Yes, or even not that deep. Let's just take a look. 38, 50, and 61 is yes, are on the screen. 38% is 7,337. So that's the correction here, and please notice the fact that the momentum is breaking below the level of the 50, but it's not that low, 48 points, so that's not bad yet. We can still bounce and head back up again, but if we get lower and lower towards the next technical supports and next Fibonacci retracement level, then of course the chances for a bounce will be lower as well. So the odds will be against the bulls. On the longer term, from other point of view, we should say that this head and shoulders pattern target, price target had been hit and completed, which is why there's this nice bounce here. Eventually the next target is around, I think, let me just take a look, 6,992. That will be the next target if we have new low below 7,107. For now, we are still waiting for the market to test the lower Fibonacci retracement levels, and then possibly there is a chance for a bounce to continue this move to the upside. So what is going on the cable? As you can see, a cable is still trapped inside of this smaller consolidation zone. 1.3792 is the technical support, 1.3892 is the technical resistance. Only if we break above this level we can go higher towards the next target at 1.4 level, around this level. So we got this pin bar here, but it doesn't mean that much because it's inside of this trading range here that previously was 1.5731. Now it's a little bit tighter. The good thing is that the momentum is still positive, and it's picking up a little bit, but we need a breakout to tell exactly what to expect from the British pound during the next few sessions. So I promised the US dollar index. We didn't look at it for quite some time. For right now, yes, we got this Fibonacci, this wave, K Elliott wave. There you go. It's not necessary now. The key thing here is that last pin bar looking like a shooting star. It's not a perfect textbook example of a shooting star. It just looks like one, but it's fair enough for me, because if I will make a kind of a parallel channel here, you can see the upper channel is being very well responded to, right? Very well treated, because of the market participants. They know this kind of a line. They have it on the screen as well. Let me just put a middle line as well. So right now there was some kind of a reaction on the middle line here, bounce, breakout below the middle line, not that far from the lower line, bounce towards the middle line again. And please take a look at this one. This is very, very suspicious candle. It looks like a doji with very, very big upper shadow. Today not very much of a movement yet. Nevertheless, it looks like right now we are neutral market conditions, right, on the RSI, but it can move higher back on again. Why it can move higher? Because take a look at this. This is a higher high, right? This is a higher high. There is some kind of a low, but this is a higher low because this is the low, right? So we have a, let's say, eventual high, low, higher high, higher low, higher high, higher low, higher high. This low is higher than this one and higher than this one, right? So if we put a line here, some sort of the technical line, not necessarily trend line, but some sort of the technical line, we have something like this, okay? And if we have something like this, we can easily do like that, right? But we have a breakout here, so we can say that this is our second channel. So this is higher high, which is the definition. This is a higher high, this is higher low. This is definition of the uptrend, which is why as long as there is no breakout below, this is the level of a 91.92, the odds to move higher are bigger than the odds to move lower. But we need to break above this middle line here, because as you can see, bears are attacking this zone. This is the zone around the level of 92.70, 92.80, 92.85, 92.84. Somewhere there is around this level there's an increased bearish activity. Okay, in terms of the momentum, it's still neutral. We can go up, we can go down, but because in the background we have a beginning, potential beginning of the uptrend, we are still bullish on the US dollar as long as this level is not clearly violated or the market is out of the gray channel, of course. And the last thing here is a Bitcoin. What is Bitcoin doing? Yesterday we had a very unusual candle here, a little bit up, a little bit down. That means indecision. That means the Bitcoin traders, they are not secure. They don't feel secure. They don't know what they want and where they want to go. This is that candle. They are very susceptible for any rumors, for any kind of speculation, fundamental speculation, of course, and very susceptible for that kind of data. And they're just reacting emotionally. So the traders, they don't know what they want and they don't know where they are going. It's all because of this candle. We go up and then we are being capped. We go down, we are being bought back up because of this support zone between $41,188, $43,053. So definitely this is the time to wait for some kind of a breakout in either direction, to the upside above $47,060, to the downside below $41,188. Otherwise, it's just an inside play. It's just an inside of this zone market whipsaw movement, up and down, up and down, up and down, until some sort of the trigger will make this market to move in a direction, in a certain direction. So that's my point of view for all of this cryptocurrencies and of course the currencies for today. Thank you very much for watching, and I hope I see you guys tomorrow. So take care and bye bye.